Hi, welcome to this online session from Impact Taxation and Financial Services. In this session, we'll have a look at why a self-managed super fund or SMSF must have corporate trustee. Okay. Okay, this is a brief introduction about myself. You can pause the video to have a quick look. Okay, just a small declaration. We're only providing information, general information only for this session. So before you make any decisions, make sure you consult a professional person. Okay, so there are two choices of SMSF trustees. So one is you can be the individual trustees. So based on the Sixth Act, all members have to be trustees if you elect to be individual trustees. Okay, and then the second choice is a company can be the corporate trustee. Okay, but then if you do choose a company as a corporate trustee, all the directors of the company need to be the members. So every member need to be a director of the corporate trustee. Okay. All right. So then why self-managed super fund need to or must have a corporate trustee? Okay, there are a few reasons. Let's go through them one by one. All right. So the first reason is the longevity for future generations. Okay, because SMSF will last forever. Okay, so that's actually different from a common family trust. You might already know. Normally, a family trust will last 80 years. Okay, so after 80 years, the trust will be closed down. Of course, it depends on which state you're setting up the trust as well. Okay, normally it's 80 years, and then but SMSF will last forever. Okay, then only the company or corporate trustee can last forever. That's matching to the life of SMSF because nobody can live forever, any individual or natural person. Okay, so that's the first reason. Of course, for SMSF also provide great strategies. Okay, for um, uh, the family to pass the wealth down to future generations. So when this can last forever, that's actually even adding more flexibility or more benefits to it. Okay, for the family to pass wealth down. All right. Okay. All right. Then also, only SMSFs with corporate trustees can pay lump sums as well as pensions. So pensions is actually the periodical payments, okay, to the member, okay, and then so only corporate trustee SMSS SFs with the corporate trustees can pay lump sums, all right, and then also self-managed super fund with individual trustees actually have a tighter guidelines from the government, okay, for on the tax benefits. So there will be potentially missed tax benefits or planning opportunities, okay, if SMSF only have individual trustees. All right. Okay. Okay. Also, in terms of managing or administration of the trust, it's going to be easier when it's using a corporate trustee. Okay, the main reason is okay if the trustees will come and go, or members will come and go from SMSF because of divorce, because some people might die, and then or family breakdowns. So so trustees or members come and go, and then the assets held within the SMSF, they're actually held under the name of the trustees. So I don't know whether you know about this, but when you register an asset under a SMSF or similar to a family trust, actually, So when you look at the title deed, the name of the owner is actually the trustee. Okay, it's not because SMSF is actually a trust. Okay, so it's not a separate legal identity. Yeah, so all the assets are held under the name of the trustees. So then imagine when the trustee changes, if it's actually only got the individual trustees, then the asset registries, okay, and land title offices all need to be informed. So every single time there's one change, then you have to inform all the registries. Okay, so potentially, shares, unit holders, they all have different registries with the government. Okay, so you have to do a whole lot of changes. So it's just adding a lot of, it's going to be time consuming as well, and you have to do it every single time when the trustee changes. But with a corporate trustee, there'll be no change. You just change the directors basically of the corporate trustee. Yeah, when the members are changing. Okay, then also self-managed super fund with corporate trustee will provide some litigation protection as well. So because trustees could be sued due to some assets held under SMSF. Okay, so an example can be a tenant or visitors may sue the owners due to injury or damage. So the owner is actually the trustee, okay, trustee of SMSF. And then individual trustees will be exposed right away, okay, because they're the trustees already. And then, but directors of corporate trustees are protected, okay, because they can, they're behind the corporate trustee. If the corporate trustee has no assets in it, so it's similar to a family trust with the corporate trustee, okay, have no assets in there, then there's nothing to be claimed. All right, and then so that's why the directors of the corporate trustees, their personal assets will be protected. Yeah, all right. Okay, then also it's going to save ATO penalties. Okay, so why is that? So when the trustee breach one of the SMSF laws, because there are many, yeah, they're actually quite strict regulations and legal requirements of the self-managed super fund trustees. Okay, so if they breach one of the laws, then ATO could fine the trustee up to $13,200. All right, so it's actually quite a lot. And then for individual trustees, this is for each trustee. Okay, the maximum number of members for SMSF at the moment is 6. So a self-managed super fund can have maximum 6 members. So if they're individual trustees, so 6 trustees, each of them will be subjected to that amount penalty. Okay, but for company trustee, it is only the company and not the directors. Okay, so it's only one entity, only one trustee. All right, so potentially it will be a huge saving. Yeah, if you have multiple members within the self-managed super fund. All right, that's the end. And here are our contact details. If you have any questions, don't hesitate to let us know. Drop us an email or give us a call. All right. Thank you for attending this session, and we'll talk to you next time.